Hello everyone, my name is Tianyou Feng. Today I'm going to present you the company performance analysis of Home Depot. Company analysis is critical in evaluating an organization's space of work, where Home Depot is no exception. For better understanding of a company analysis, different metrics are considered. They include environmental, business, management, financial, and marketing analysis. The company was founded in 1978 by Bernard Marcus and Arthur Blank. Their primary purpose was to build a company that offers retail services in the home improvement segment. Over time, the company has grown rapidly by acquiring other firms to make it a multi-million dollars company operating in countries such as the United States, Puerto Rico, Guam, Canada, Virgin Islands, and Mexico. The company's financial analysis gives various inferences regarding its performance. If done internally, financial analysis can help managers make future business decisions or view historical trends for success. If it is conducted from the outside, financial analysis can help investors choose the best investment opportunities. It is used to assess economic trends, develop financial policies, and develop long-term plans for business activities. Generally, financial analysts will conduct financial analysis through the company's financial statements, profit and loss statements, balance sheets, and cash flow statements. We will be look through some tabulations of the income statement, balance sheet, and change analysis respectively. Based on the income statement, the horizontal analysis indicates a continuous increase in revenue, gross, and operating profit in absolute figures since 2016. Though various metrics are doing well, the gross percentage margin shows a more stable state as it averages around 34%. Contrarily, operating profit is rising from a low of 8.41% in 2016 to 10.28% in 2017 through 8.55% in 2018. The balance sheet review of Home Depot. Total assets tend to balance off. There has been insignificant changes between the analysis period with a maximum change of around 3.64%. Long-term debt tends to be growing significantly, showing a minimum change of 19.91% in 2017 and a maximum of 44.79% in 2018. On the contrary, equity is losing its value as it shows a maximum of deviation around 143.34% in 2018 in comparison to 2016. These indicators highlight that the firm's financial position is not strong enough. The balance sheet also indicates a favorable performance as the assets increased in 2017 and dropped in 2018. The percentage status in the horizontal scan is 103.64% and 102.41%. respectively for the years 2017 and 2018. Besides, the long-term debt is increasing whereas equity is decreasing. More recent change in the financial position we can see from the chart. The statement of changes in financial position reflects the whole process of the enterprise in a certain period, such as the source and channel of capital acquisition and the purpose and direction of capital. It analyzes the reason for the increase and decrease of net working capital and the statement of changes in financial position caused by it. The statement of changes in financial position reveals the reason for changes in the company's capital and reflects the dynamic financial position of the company during the accounting period. That is, the general situation of business activities, investment and financing activities. Especially, the statement of changes in financial position can reflect the amount of profits realized by the enterprise, the amount of working capital obtained from operation, the distribution of profits, the increase and decrease of assets, the increase and decrease of liabilities and the owner's equity, etc. The statement of changes in financial position specifically describes the causes and results of changes in capital and provides a full picture of changes in the financial position of the enterprise during the reporting period, which is conducive to understand the reasons for changes in corporate capital. At the same time, the statement of changes in financial position is the bridge between the balance sheet and the income sheet. From the chart, the latest changes are the negative changes in assets and the increase in liabilities. However, this does not mean that Home Depot is facing financial difficulties. Instead, we need to further analyze other measures to reveal the company's current situation. Now we look at the income statement performance sheet for financial analysis. From the year 2016 to date, the company's revenue by a minimum of 6.67% from the prior year's numbers. Gross profit indicates a more stable status around 34%. This means that Home Depot has managed to attain a favorable bargain from suppliers, thus the ability to control cost of goods at around 66%. Finally, the company has improved its operating income from 8.41% in 2016 to around 10.28% in the most recent result. These metrics indicate that the company is slowly gaining a competitive edge in reducing its overheads. Next, financial ratio analysis is the subsequent analysis undertaken for the Home Depot. Return on assets measures the efficiency of the company use its assets to generate profit. As we can see from the table that return on assets has been increasing since 2016, which means the company has increased the efficiency in generating profit from its assets. Similarly, the operating profit of the company has also been increasing since 2016, which indicates that the company has a lower cost-to-sale ratio. This means that Home Depot is taking less cost to generate more profit. However, gross profit margin has been stable. Gross profit measures the sales subtracting from the cost of goods. The margin of it being stable demonstrates that the company has been taking roughly the same cost to generate its sales, which implies that the company's service cost is decreasing so that the operating profit could be higher. To sum up, the profitability ratio indicates excellent performance since 2016. Next, let's take a look on the liquidity ratio. The company indicates a more or else a 1-to-1 on the current ratio, which is much lower than the recommended ratio of 2-to-1. Similarly, the asset test is below the 1-to-1 recommended average as it currently stands at 0.3. This means that the company has the ability to exercise its debt obligation because it could quickly liquidate its current assets. However, since the ratio is around 1, it implies that Home Depot's ability to paying back debt is weak, which leads to the conclusion that it is not quite possible to issue more debt on a low interest rate. Efficiency ratios indicate that company is becoming more efficient as time passes and as the inventory turnover has increased from a low of 4.9 times in 2017 to a 5.33 times in 2018. This is equal to saying that Home Depot has the ability to sell all inventory around 5 times each year since 2016. This index demonstrates that Home Depot as a retailer is able to avoid the stacking of inventory and making good sales of its goods. Lastly, financial leverage ratio come in the picture. Both the debt ratio and the debt to equity ratio show a high value of debt compared to the assets and equity. This does not mean that the company is losing control over business. Rather, it means the company is still expanding and requiring large amount of capital to maintain its operation. The profitability strength works well to mitigate the weakness of a high leverage of the company. In conclusion, the financial ratio of Home Depot is generally healthy. From the analysis we get from the financial ratio analysis, we can testify that we are not for sure saying that Home Depot is facing financial difficulties because of its data from the history and from the future. Now we can move on to management analysis. Management analysis is another profound analysis that positions an entity within the industry of operation. Any conscious entity considers both internal and external factors influencing its sectorial performance. Home Depot operation adheres to corporate social responsibility as the firm has won a couple of awards and trophies. The entity considers its means of improving stakeholders' value while also ensuring that its customers are getting value for money from its products. Considering these factors, Home Depot is the environmentally cautious, but improvements can still be made. Moreover, market analysis is another parameter that shows how an entity is performing. Home Depot controls a market share of around 3.8% with Costco wholesale, Lowe's companies, and Walmart being the major competitors. Over time, the company has changed its marketing slogans to attract and gain traction of these industry customers. The involved slogans include more saving, more doing, you can do it, we can help, and when you are at Home Depot, you'll feel right at home. Based on these changes in slogans, it means that the firm prioritizes the target customer's needs. I believe change of the slogans can do positive things for the company. An analysis of the firm's stock also paints a picture of a favorably performing firm. Fundamental analysis involves evaluating the current performance of the company versus its historical performance. Although the company indicates that common shareholders' number is reducing, the market share price is increasing. Specifically, the average for the year 2019 is $208 per share, but the current market price per share is $237.93. While deciding a course of action, the latter metric, which is favorable, is used. The stock price also reflects the investor's expectation toward the company's value. In the interpretation, investors believe that Home Depot is performing better and growing constantly year over year, and hence the stock price has been increasing steadily since 2009. We can see that from the chart over here. The SWOT analysis matrix of Home Depot offers a straightforward picture of the company's performance. We can see here that the strength of this company include business model, well-known brand name, extensive product offering, and ability to grow. Some opportunities are room for expansion globally, thus spread risk as well as increase their market share, sourcing their products globally, and utilization of IT solutions. On the other hand, some weaknesses of the companies are low working capital and high leverage ratio. The company has not much money to operate and it is experiencing relatively high pressure of debt. And some threats are potential competitors, decrease in customer loyalty, and market saturation in the US. The SWOT analysis indicates that Home Depot had strengths and opportunities that surpass its weaknesses and threats. Some of the primary indication of its persistence and perseverance include the ability to pinpoint opportunities, acquiring other companies, and expanding capabilities across different countries. In all, some recommendations for Home Depot. If the current performance would be independent without historical improvement in NPS as well as increase in revenue, the best idea would have been to dispose the shares. However, based on the calculation of value per share and prevailing market share, the shareholders need to hold the shares as the company's market per share is increasing over time. Notably, the shareholders need to hold their Home Depot shares. Based on the financial industry and stock market analysis for Home Depot, the company has many opportunities that it is already exploiting or planning to exploit. Additionally, the company's historical performance indicates that its market share price is increasing even though its book value seems to be low. This means that its shares are undervalued, hence it is worth holding them. And the chart here shows the reason to hold the shares. In all, Home Depot is at a good place in my opinion because it has a relatively longer history and well-known brand name which gave many opportunities for the company to grow and expand in the US and in many other countries. Thank you for listening to this presentation. I hope you may learn something about Home Depot within my analysis, and also many other companies may be facing the same situation as Home Depot, and I think making analysis of Home Depot also taught me many things about companies in the US. Thank you.